It's all a numbers game. I want to know how much money I'm putting in, how much I'm getting back, and what's the rate of return on that money. I want to get rich now. So I got into real estate. I don't think real estate is a get rich now either. That's a whole other job on its own. I bought my first house in 2014. Realized that that was sucking money out of my pocket. I've always wanted to buy gold and silver, so I only got into Blossom recently because I didn't know it existed. If I did, I would have jumped in sooner because my entire investing journey has been pretty lonely. When I first started investing, my goal was to retire. Things weren't good at work. I was working crazy hours. I worked a 24-hour shift. That is when I basically switched and I was like, I need out. What do I do?
Well, hello everyone and welcome back to Momentum Finance channel. My name is Mo and today I'm honored to be welcoming another great guest here on the show. Blossom member, an investor, entrepreneur, and a man of many talents. Welcome to the show, Kyle.
Pleasure to be here. Thanks for having me.
For those who may not know you as well, why don't you give us a quick rundown of who you are and what makes Kyle actually come on this show?
Sounds good. So for me, everybody knows me on Blossom. It's kind of the first place that I made myself recognized. My handle is Invest with Kyle. I started investing, 2012 was the year I started investing. That was the year that I first got hired at my career that I was at prior to now, which was CN Rail. Really excited about that. And for anybody who doesn't know much about CN Rail, basically they have a share investment plan. So basically you could take up to 10% of your wages and invest them into CN Rail itself, and they'll automatically buy you stock and they will match 33%. So this was the beginning for me. So I got into that immediately. And after that, I kind of got hooked. I started investing and then I became a student. So basically, while I worked, there was a lot of downtime. Like when trains are going, you can't work, you sit and you wait. So there's a lot of that. There's a lot of traveling. I remember I was on a train for about 7-8 hours a day at the beginning of my cycle to get to work. So I took all this time to apply it, to learn knowledge. So I would go down to chapters. I researched the top books that I could find on investing, and I would read. And I remember being 23 and it felt like I was reading a different language. I would go through it and everything to me was just like, what is this? So it took time and I just kept going. And I started in the stock market. I had ups and downs, made a lot of mistakes. And then I transitioned into real estate because I found stock investing was too slow for me because I want everything fast, just like every beginner investor wants. I want to get rich now. So I got into real estate. I don't think real estate is a get rich now either. That's a whole other job on its own, but I've been consistent. I bought my first house in 2014, realized that that was sucking money out of my pocket. So I eventually rented it out. And then I bought a triplex, and then I just slowly kept going from there.
That's super fascinating. So what transitioned you back to, are you still pursuing both real estate and stock market investing at the same time?
Absolutely.
Is that correct to say?
Yep.
Yeah. And then with stock market investing, if I read correctly, you have built a portfolio other than investment in CN Rail. Is that correct? Or yeah. So what then brought you back to expanding on that? Was it some of the books that you read that kind of intrigued you? Like, yeah, it's been working well for me. I need to kind of start investing on my own, and maybe touch on that as well. How did that journey start? Did you start with like some individuals start with individual stocks, or did you then transition maybe at some point to ETFs? I'm really curious to know.
So when I first started, everything was individual stocks. They had mutual funds. Mutual funds had high fees. So I was always dissuaded to avoid that. When I first started, I actually used a financial advisor at Edward Jones. And they did well. Their job is to make sure that you're safe and your investments are going to continuously rise and you're not going to lose money, which is great for most people. For me, I wanted to make money faster. So Hunter Harris, like a little bit of backstory here, was like the bulldog in railways. He was the CEO at CN, and he made me a lot of money. He made a lot of people a lot of money. They would do stock splits and then buybacks, and that stock like doubled for me over a period of like 3 years. Then he went to CP, and I was like, okay, I want to invest all my money that I have at Edward Jones into CP. It was like $7,000 or $8,000, and they're like, no, we're not doing that for you. And it really talked me out of it. I would have probably quadrupled my money, if not more, on that. So I was like very disappointed because I thought that I knew more than they did, but all they were doing was protecting me, right? So after that, I pulled out my money to buy my first house. And then after that, I just decided I wanted to do it on my own because that's how I'm going to learn. I started off buying individual stocks. When I started, every trade was $10 a trade. So you had to have a decent amount saved up before you bought, which is different from today's investing standard. So I had a lot of CN shares. I also bought a couple other companies, like Canadian banks, like safe things. But then in 2015, oh, it was 2014, there was an oil correction. So I watched that drop and I'm like, oil's not going anywhere. Everybody fuels up their vehicle. Like it's a staple. It's not going anywhere. So I invested in Baytex and Crescent Point, and I lost and lost, and I kept buying as it was going down, and it never came back. And I was sitting there and I was like, well, what do I do? Like I just lost half my net worth. Like I put a lot of money into it, right? But at the time, I think I had like maybe $25,000, $30,000, but I lost like 10, 15,000. I was like, oh, this is devastating. It's terrible. So I took all that money. I bought all individual stocks. I bought some REITs. I bought Scotiabank. I bought like very safe bets, and I just hung on to it. And I said, I'm just going to play it safe. And I made majority of my money back the next year because the stock market tanks, it goes back up. And since then, I've always used the TFSA for investing. And I think it's one of the strongest tools in Canada. So I take my money out of the TFSA, I go and buy a rental property. Then I replenish the TFSA. And I've just always done this. So now, like after like 2020, I was able to max out my TFSA again because I sold a rental property. So I've always wanted my TFSAs maxed out because it's one of the strongest tools, even more so than real estate because it's tax-free. So anything that can project your net worth and make it bigger, I'm all in, right? So that's how I got back into stock investing. So I'm kind of using it to buy real estate and then back into TFSA and then back into real estate. So that's how I
And you
ended up there.
recently, speaking of real estate, recently acquired a duplex, right? For $427,000 below your target price. Congrats on that. Can you walk us through how you found and negotiated that deal that was, of course, better than what you were hoping for?
Yeah, absolutely. So it's not so much in the negotiation, but knowing people's situations. So I have a friend that does garbage removal and also rents out dumps for like garbage bins for people to do renovations and whatever projects they're working on. So he was hired to clean out this place, and basically it got overrun by the tenants. So it was stacked with stuff. It was like very like not taken care of very well. I guess the owner had some health issues, unfortunately, and he was tired of dealing with it. Stress at that point in your life, you're like, I need to get rid of this place. So fortunately, we were there at the right time and we put in our offer, and it's been sitting for a while and nobody's been buying and it needs a lot of work. So we put in our offer and we started off lower, and then our target was 430, but we managed to end up at 427, which is 3,000 below, which is great, below our target. And we think we have a really good chance at building some solid equity, getting in with a low down payment after refi, and a solid cash flowing asset after the fact. And hopefully our numbers land along the way. And if they don't work out, we're still in good shape. We have a lot of room to make up that difference, right? So I think at the end, it was like $140,000 in equity if things went perfectly. But even if we have to fork out an extra 50, 60,000, we still make 80,000 in equity, right? And then have a cash flowing asset. So
Is that what you try to do with real estate, trying to have some of that margin of safety built in just to protect yourselves?
absolutely.
You've mentioned, Carl, that real estate is not passive. And I know even on the onset of the call, you touched on that. But on Blossom, you've indicated that it's actually more so a business. Can you elaborate on that?
Absolutely. So a lot of people going into it, and even myself, when I started, I went into real estate expecting passive income. You buy your property, you rent it out, you collect your money, you're good to go. You learn really quickly that when you're dealing with people, you're not just dealing with, simple transactions. You're dealing with people's emotions, you're dealing with people's, ups and downs, their problems in their life, and they all project onto whatever's going on. So if somebody's not paying their rent, there's a problem, right, in their life. But a lot of people take that as you're the problem, but how people are going to react to that, right? So you have to treat it like a business, like any business. Your customers come first. They are your customers. They are paying you a large portion of their income to live at the places that you are renting to them. You are required to keep up with the maintenance. They ask for something, they're not bothering you. And a lot of people look at it that way. They're like, oh, my tenants, they never stop calling me. And I'm like, well, maybe you should be there fixing it for them. Like, if you go there, fix one thing, and then leave, and they call you tomorrow to fix another, are you asking them, hey, is there anything else? Go through it with them for a day and make a list and then just brainstorm, because they might not think of it right off the top. You have to provide excellent customer service, and you got to treat it like a business, because you are a business owner. You own something that you are selling to another person. And that's the way I look at it. And it's done pretty well for me.
For this property that you most recently acquired, if I recall from your post, you were talking about you will do some additional renovations to it, potentially adding extra unit, I think garage unit to it. So really trying to capitalize on that. How do you decide when picking the properties that you'd like to invest in next, whether it's the right essentially investment for you, and how much of a, let's say, fixes or repairs or renovations is a decent amount that warrants it to be actually worthy of your investment and time?
Absolutely. So it's all a numbers game. I want to know how much money I'm putting in, how much I'm getting back, and what's the rate of return on that money. I don't do flips. I do rehabs. So it's called a BRRRR in our field. Kind of started becoming a big thing around 2020, 2021. So you buy, you rehab, you rent, you refinance, then you repeat. And for me, I think it's one of the safest ways to get into real estate, because you're building the equity in. So if something does go south, you're not buying an asset at the peak of the market and then it drops 10% and you owe that money. So you might lose the 20% that you saved. But if you build and renovate, you get that margin of safety in there, right? So when I look at a property, I guesstimate what its value is based off of what solid properties in that area are selling for, what the average house price is in my area, what the rents are. So generally, we'll kind of want to look at the 1% rule, even though that hasn't really been working out too well lately, but it's starting to get better. So if you're collecting $70,000 in rent a year, you generally can afford a $700,000 property. So that's kind of a way to look at it quickly, but then you break down all the numbers. You want to get all the expenses. How much is everything going to cost? So you have to think of it all. My utilities, my insurance, my mortgage payment. You're going to have to do maintenance on that property. So you're going to have to put some money aside. Is it an older property? Maybe you want to put aside 8 to 10%. Is it a newer property? Maybe you want to go with 3 to 5%. So you kind of got to guesstimate there, but you always want to be safer than what you think. Now, vacancy. Well, there's going to be times when a tenant moves out. You're going to have to do renovations. It's going to take you 3 weeks, 4 weeks. You're going to have to paint. You're going to have to make repairs. So that needs to be factored in. Snow removal is a big one. If you have multiple units, the landlord is generally responsible for snow removal. Any rentals on the property, like hot water tank, furnace, AC, if you rent those, property taxes, you need that. I think I said utilities, but like there's gas, electric, water. So you need to make sure you have all these written down. Then you guesstimate what the rents are based on what the rents are going for in your area. So once you have that, you take, I think I missed property management. There's also property management. If you do not have the time and you have multiple properties, it's beneficial to have a property manager. But you can't rely on them 100%. You still have to go there and check in on the property once in a while. So after you have all this factored in, now we see what our cash flow is at the end of the month. Every property needs to have cash flow. Good investment does not take, or a good investment doesn't take money out of your pocket. It puts money in. So if you don't have cash flow, you're speculating. You're hoping that that property is going to keep going up, kind of like Toronto did for the last 10, 15 years. So that's how I approach it. Now, this property I showed up to, and it has a massive lot. Massive. Like you can park boats, quads, ATVs, parking for like 10 vehicles. Like it's huge. Now it has a garage. I know from being in the field and having connections in the field. In Ontario, you were allowed 3 units on a property. It's now 4 on a single family R1 zoned house. So you can put 2, I think you can put 2 in the house and 2 out of the house, or 3 in the house and 1 out. And I think they're changing it. So you can have up to 4. So I can actually convert that garage to 2 extra units, which we're looking into. Now, I look at that and I saw opportunity. It's like there's already a basement apartment. There's an upstairs apartment. Getting it below, I think below market value. And there's opportunity to add additional units by the garage. So I think that's where we had the opportunity over, let's say, a retail buyer, someone who's looking to buy this place as their principal residence. So once I saw that, I pitched it to my partner, who was the person who brought me the deal. And I said, here you go. Here's the numbers. Here's what I'm looking to do. And they were on board right away. They said, yeah, I think you're right. So
it's so fascinating. Obviously, there is a lot that goes behind the scene. It's not as simple as like, oh yeah, I found this and we're just going. You obviously do a lot of legwork, homework. And I can imagine there might be a lot of cases whereby you review the numbers and it may not work out. It's not like, as always, there's just going to be the first thing that comes to you is just exactly the perfect unicorn that you're looking for. So, Carl, what makes real estate, given all of the work that is involved, as enticing for somebody who's outside? Let's say for me, I haven't done a ton of like real estate investing, very, very, very minimal, I would say. Is it the more attractive rate of return? Is it the fact that you are taking advantage of leverage? Combination of all other reasons? I'm really curious because it comes with a lot of work from the sound of it.
yeah, it does come with a lot of work. The more money you have, the more passive it becomes. But at the end of the day, it is still work. I love it because obviously it has a great rate of return. If it didn't, I would be like, this is miserable. But I think the statistic is that majority of millionaires, I don't know what the exact percentage is, are made through real estate. Also, like I kind of learned that through like Robert Kiyosaki. But when I got into it, I had no idea how the money was made. And it took a while. And I said, I'm going to do this. I'm going to see it out. And then once you have your first refi, you're like, that's where the money's made. Cause it's like, you're basically breaking even, but you don't see the money being made because it's all in equity. I like real estate because it makes you it's more powerful wealth building because banks will now lend you more money. So when they see your portfolio and they're like, oh, you have a lot of equity here, you have a lot of equity there, you have a lot of equity here, because they know they can extract that from you if there's ever a problem. So I can take, let's say, a $500,000 property. I can go and take $100,000 and I can use that to leverage 500,000. And some people might, I've always seen this argument with real estate versus stocks. I can't say one's better than the other. I personally think real estate will make you more money. Some people will argue this, but what they say is you take your $500,000 and you put it in the stock market, and you would get a better return on the stock market than you would on the house. Yes, if you just looked at it that way. But I'm taking $100,000, I'm leveraging it to get $500,000. And sure, it might not go up as much, but the debt is being paid off by tenants. That debt is tax deductible. And now you're getting rent from those tenants. So yeah, after 25 years, it's now paid off, but like across that 25 years, you're getting rent appreciation because you can raise the rent around 2 to 3% every year. And then 20, 30 years from now, well, you're getting amazing cash flow. So they never account that cash flow into the equation. And I think that a cash flow is like worth a lot more. Like I think real estate would slightly come ahead. I would have to run like the exact numbers, but that's the difference for me. I made a list. Someone asked me like, why do you feel like real estate is so good? And I made it a list. I don't know it verbatim, but it's on one of my posts and replies. And your debt's being paid down. You're getting appreciation. You're tax deductible. Like, I don't know. It's my favorite asset class. And you know what my favorite thing about it is I have control. That was the one part that I had a hard time in the stock market, picking individual stocks. This is why I love the ETF era. There's ETFs everywhere. I'm like, give me those ETFs because I don't want to hold individual stocks, because all it takes, and I make this joke all the time, and it's pretty low-bearing fruit, but I don't want to see the CEO go to a Coldplay concert and get caught cheating on his wife, and all of a sudden I lose all my money. That stuff
Yeah, I
drives
hear
me
you.
nuts.
You actually have a approach of diversification in approaches that you take in investment. So your portfolio not is just only in real estate and stock market. I think you're invested in crypto from your post. It seems like also precious metals. Did it all start early on, or gradually over time you got into those other fast?
Yeah, I only got into the other ones in 2020, 2021. I've always wanted to buy gold and silver. To be honest with you, the conventional ways, what investment are you going to buy where you lose 10% right off the top? Because you look at the spot price and the companies charge you premiums. And these premiums are more in Canada than they are in the States. And it's like, well, if I'm buying an investment, and then where do you go to sell it? Well, you go to sell it maybe your local like shops, and they're giving you under spot, and it's like, hey, well, this just doesn't make sense. So in 2021, I discovered a Facebook group, which this is, even talking about this sounds ridiculous. But this Facebook group had all the precious metal bug guys, like the people who loved it from all over Canada. And they were all selling and trading precious metals at very attractive prices. Like not below spot, but like slightly better, and always better than the retail companies like Solid Gold Bull, I think it is. So I got hooked, and I was like, hey, well, like this is scary. Like I don't want to be sending, thousands of dollars to random people on the internet. But I did a little bit of research, and these people were mostly pawn shop, or not pawn shops, but precious metal shops. And they were selling this stuff like from like Alberta. And I was able to actually call the store and talk to them. They're like, yeah, that's us. So it was a market where all these people could come together, buy and sell. So I got on there and I started buying. And then there was another Facebook group called The Good, the Bad, and the Ugly, where when deals went south or deals went good, you could rate people. So all you had to do is type in someone's name and you could see what everybody said about this person. I was like, this is actually really clever. So I took a risk and it worked out for me. Fortunately, I've taken a lot of risks that seem to have worked out in my favor, because even real estate, like I had my single family house rented, then I had a triplex. I'm like, at any point, if one of them wanted to stop paying rent for 8 months, I could have gotten blown up. But I think I was fortunate that I ended up in that situation. So that's how I got into the precious metals. I ended up buying a bunch. It was it was started off as a hobby because I just love holding it and having this like asset in your hands. It's like one of my favorites. So I was excited that I got into that, but then crypto, I've known about it since 2014. It was the first time a friend brought it to my attention, and that was Bitcoin, and told me the idea. I heard about this asset on Reddit. So I looked it up and I'm like, this is a fantastic idea. I love everything about it. But who's going to pay $140 for a Bitcoin? Doesn't make sense. Like, where can I go spend it? Like, what do you mean? So I just, one of my biggest regrets is always don't count things out. Don't just always look at everything with an open mind, and look and investigate. Do your research and investigate, but don't ever say that, oh, you can't make money in any kind of product. Don't, because I looked at that one and it didn't make sense to me. And it didn't make sense to me until there was more information around 2021. So that's when I started buying. I decided I think I bought just a small amount and just hung on to it, and then started buying every couple weeks since then. And I believe in the project. I think it has a future, but we'll see. I think it's also pretty risky.
Are you still investing in it, but maybe as a smaller portion of your portfolio as a whole?
Yeah, it's definitely a smaller portion. It looks like a bigger portion on Blossom because it's appreciated so much, but I buy about $200 bi-weekly, I think, is what I had set up for a while. But I would definitely tell people who want to invest in it, invest what you're willing to gamble and lose. I don't think you're going to lose all your money on Bitcoin. I think that it could correct, and you could lose like 20, 30, maybe even 40% if it corrects bad. But I think over the long run, it'll do well. But who's to say it'll even stay? Like, it sounds like everybody's on board and are now adopting it, but I don't have a crystal ball.
You recently had a little bit of the type of experience that you would hope to come across. I think you found out that your account on Wealthsimple was breached, and then you had to go through a little bit of struggle to actually get it back. But thankfully, it seems like it got all resolved. Tell us a little bit about that, and maybe what were some of the key takeaways from it that hopefully others can try to avoid such circumstances.
Yeah, I was rushing, and I should have probably slowed things down and took a couple deep breaths and just anyway, what happened? The story is I was trying to transfer some stocks I had in ComputerShare. So I needed to get a hold of Wealthsimple to accept the transaction. So I got them on the phone, and they said, trying to walk me through it. And I'm like, I can't do this on my phone. They're like, hey, you're going to have to go to your desktop. And I'm like, okay. So I go into my desktop. Can you log into Wealthsimple for me? I have never logged into Wealthsimple on my desktop. So I'm like, okay. I go into the search bar. I type in Wealthsimple, enter, and it pops up. It didn't direct me to Google. It was Microsoft directed me to Bing. And there's the top link, Wealthsimple, and I just clicked on it blindly, and it popped up. Identical page, but it's a dated page. I wouldn't have known that because I haven't seen a Wealthsimple page. So I log in, put in my credentials, and then it sends me the 2-factor verification to my phone. I'm like, oh, okay. So I type that in, and it's just loading, and it stays like that. And I look up at the bar, and it says wealthsimple.info. And I'm like, that does not make sense to me. So I'm like, hey, maybe it froze. I refresh, nothing. I go back to Wealthsimple whatever into the search bar, and I click on another link, and it pops up completely different. I immediately tell the guy on the phone, something happened. I logged into a fake account. I think it breached. I think somebody's got my information. Then I thought, and I said, how did they get past the 2-factor verification? It had to have been a Wealthsimple site. So I ignored it, and I was like, okay, I think we're good. I'm just overthinking it. And then after I got off the phone, I look and I have a couple emails, and I look at the emails, and right away I see a bunch of transactions that I did not do. So I call them, I get them on the phone, and I start explaining to them, like, listen, my account got breached. You need to lock this. And they're like, oh, did you make this transaction? I'm like, no. Okay, did you make this transaction? I'm like, lock my account right now. And I'm like freaking out. So they locked it, and I said, what happens now? Am I going to get my money back? And they're like, yeah, we're going to figure this out. We'll get your money back. And then I was like, I can calm down. I was like, for a second, I was like, I think everything's gone and I'm going to lose out on all this money. But Yeah, it was stressful, but I thought it would make good content. So I posted it on Blossom. I was like, people are going to want to see this. And maybe I'll be able to protect some people,
For
you
sure.
know, because this could happen to anybody, I guess, if it can happen to me. So, but you look at it afterwards, and I'm a little bit embarrassed because it's pretty obvious. When you look at it from an outside perspective, it's pretty obvious. And I know I'm going to get
I'm so
judged.
shocked. I mean, in my head, I'm trying to even figure out how did they go about even how the fact that they still got there was some sort of like a second factor on authentication activated. How does that happens? Is that on their end they're trying to at the same time somehow the system tries to actually log into the true version, but deceives you in the process, and then you essentially giving them the code type of thing?
I think so. So what I think is as soon as I logged in, exactly what you said, I think you nailed it. As soon as you log in, they're automatically taking your information, logging into Wealthsimple at the exact time or pretty close to it. And then it sends the two-factor and I put it into their website and they take it and then use it on where they're logging in. So I think
That's
that's what
wow.
happened.
Because on your head, when you're getting that email, you're like, well, yeah, it's in theory, it seems like a process that you would expect. The only thing is that obviously the site is the wrong site, but the process doesn't have a flaw. And at that time, were you on the call even with the agent at the same time too, while this whole thing was happening? I'm kind of shocked that the agent didn't, like, especially for somebody like you who has never used desktop, at least for Wealthsimple logging, they could have at least told you, okay, maybe type in wealthsimple.com or something like that, as opposed to like Googling it or something. They could have probably walked you a little bit better. And I remember you were mentioning, like, because you don't use the desktop, that's always a challenge, right? Because on the app, you're so used to it.
Exactly. And I don't want to fault them too much. Like, hopefully going forward, they can learn from this and have their employees trained. But people don't know what to look for until it actually happens and you see the damage, right? Well, that's how most people learn. We learn by everything is written in blood, right? So from his perspective, he had no way that I didn't of knowing that maybe I didn't type in wealthsimple.com. It's not like he's watching me do everything. I'm just doing it and not giving him, instructions of what I'm doing. The other thing too is like I'm a premium client at Wealthsimple. Maybe that has something to do with it where they're like, oh, this person probably knows what they're doing. They probably know it better than me. Like, I don't know. It could be in so many situations, right?
And since then, Carl, the issue has now been resolved. Thankfully, that has been addressed, right? So fully, because I think for a while you lost access to your accounts too, and you were waiting, like, okay, well, when can I access my accounts back?
Yep. I had no access to Wealthsimple for about 2 weeks. I couldn't even log in. And I was on it though. I was calling them every day and just asking, hey, looking for an update. Very polite though. Like they were great. They were a great team. Everybody's super awesome there. And they got it back and they got everything sorted out. I'm hoping that they were able to reverse the transactions and not pay me out themselves because I don't want to see scammers profit from this. I want them to, if they profit from one, it gives them a reason to go and do another. So I just hope that didn't happen, but there's not really much way to find it out. They did send me an email that's kind of scary, is that they had access to like all my personal information, IP address and all that. So I am going to go through Equifax and try to get, identity theft protection.
You did mention that Blossom community helped you stay positive during that stressful time. How important has Blossom been overall in your investment journey?
So I only got into Blossom like recently because I didn't know it existed. If I did, I would have jumped in sooner because my entire investing journey has been pretty lonely because I haven't had anybody around. Like, I did mostly everything myself, had nobody to look up to, nobody to bounce ideas off of. Like, I was just like a guy in the desert trying to find his way. So when Blossom came out, I was like, perfect. Like, I can hop onto this app and talk to like-minded people who are doing what I'm doing. And when I posted that, I was like, hey, it'll make great content, but everybody has been so positive. I've even deleted Instagram and Facebook because I couldn't post that on there. People would tear me apart. Like, I would be thrown to the wolves, and who needs that kind of negativity in their life, right? So the people on Blossom have been fantastic. Like, I've made a lot of like friends, friendly faces that I see on a regular basis commenting on my stuff and me commenting on their stuff, and you kind of see the community slowly grow around you based on the people that enjoy your content, and it's been great. I've been enjoying it, and I hope it stays like this.
Yeah, absolutely. That's so fantastic. And definitely it's a amazing community of folks who, for the most part, we are trying to help each other out, build each other up, as well as learn from one another. I think that's one of those platforms that definitely provides that in the domain of finance and investing. You recently as well, speaking of content and some of the pieces that come up through Blossom, I know you posted, and it's very nice of you to tag me in it, that the Smith Maneuver, you discovered that after apparently watching one of the interviews with Robinson Smith that I had earlier on. What about the Smith Maneuver strategy stood out for you?
The biggest strategy is that I have a fairly large loan on my home, on my principal residence, that is not tax deductible. So I'm like, what am I doing? I was like, as soon as I saw people talking about the Smith Maneuver, I was like, I've heard of it. I've done some research on it a long time ago, but it didn't pertain to me. I'm like, I lived in my rentals for the most part, right? So finally, now I have a home for me and my family, and I'm like, hey, well, this thing is just taking money out of our pocket. I'm getting nothing in return. So I was like, the Smith Maneuver. So I watched your podcast with him and started learning a lot. And I was like, oh, like I can pay off my house, convert it to a HELOC, borrow that money, and invest it. And now I'm able to write off the interest. So I was like, hey, I'm going to do that. But one thing that also stood out to me that's powerful as well is the debt pay down. So there's a strategy to pay off your house quicker where they say take out as big of a loan as you can. And I forget what the strategy is called, but I used to look into it before. And let's say you have a house that's worth $500,000. You have a $100,000 HELOC. Well, you take that HELOC and you pay down the house. Now you pay all your bills with the credit card, and you use the HELOC, and then you take your income and you pay down the HELOC. So what happens is essentially you get a 30 days of lower principal interest, right? And you get a 30-day loan on the credit card for all your bills. And you just kind of cycle that over and over again. You have to be very consistent, and you have to have more, like a decent income. Like you have to have more than what your mortgage payment is. And then that will pay down your house quicker. So I've seen the numbers on that, and I know that strategy. I was like, that will actually help me. The biggest problem with paying down your house is you have no access to the money after, but with a HELOC, you do. So my strategy, because I don't pay taxes until the end of the year because I'm self-employed, so I don't have to pay income tax. So I get all my money to work for me for that year, and then I can pay the income tax at the end.
Right.
So that's a more powerful tool to lower that daily interest balance. So I was like, hey, I'm on board. I'm going to do this. And we earn more than we spend, like significantly, because we're pretty, we don't have any car debt. We don't have anything other than the house. And we could even pay that off. So I was like, hey, well, may as well. And sitting here, paying interest and not getting anything for it. So I thought it was a really powerful tool, and I'm going to implement it and see how it goes. And I'm hoping it works out.
That's exciting. And I think especially for your case, because you have multiple rental properties, that was as well probably something that you're alluding to, right? It is definitely one of the accelerators that redirecting essentially some of that rental income that you're getting, it essentially paying it down to mortgage for the mortgage and borrowing it back, and use the money not necessarily for investing in the stock market, but also for your own real estate purposes. That actually is almost like double dipping, but in a way, it's super powerful, I think. For sure. Yeah, I'm glad that actually, platforms such as Blossom has allowed us as a group to have some of these conversations, learn from one another. Even for me, honestly, the Smith Maneuver, I think I first, not from Blossom, I heard it a few years earlier, but it was one of those things that you hear it in passing, and then, oh, it kind of intriguing. Listen to the audiobook, and then to the book, actually read the book, and then listen to a few interviews, and from there onwards, like, oh, I think that's something we can implement. And then in the beginning you try to gradually implement it, and now fast forward, you're happy. But of course, it's a longer term strategy. It's not meant for a short term kind of quick get in and get out quickly, like just like that, though, of course.
Yep. You need patience for that one.
Yeah.
When I first started investing, my goal was to retire. Things weren't good at work. I was working crazy hours. Like I worked a 24-hour shift, and I remember I would work like 18 hours. I was on call. So I would be out all night. It'd be 7 a.m. I'd see the sun rising. I'd get back home and I would book rest because I didn't sleep, and I'd get a lecture from my supervisor saying, you can't do that. And I was like having anxiety and depression and massive panic attacks because I was like, I'm basically had sleeptosis, very stressful point in my life. And that is when I basically switched and I was like, I need out. What do I do? And investing was my way out. Fortunately, things got better at that job and things changed significantly. And I ended up being there for almost 10 years. Recently, like I left in 2022 because my investing journey allowed me to leave and start my own business, which I ultimately wanted to do because I don't feel like life has a destination. I think the journey that you're on is the part that's going to drive you and give you the most satisfaction. So for me, it's changed. It went from like, I need to retire and I just want to do nothing to, okay, now I want to have the freedom to choose and do what I want in life, which is now starting my own business. So I'm always looking to accumulate. I do like stability, and I think it depends on the market. So real estate for me, I haven't done a real estate deal since 2020. And the reason being is
Oh,
because
wow.
there hasn't been opportunity. Like one of Warren Buffett's quotes is, be fearful when people are greedy and be greedy when other people are free. Everybody is saying how amazing, like looking at real estate and saying how good of an investment it is, and watching your cash double in 5 years is like, that is scary for an economy. And how unaffordable real estate has become is like terrifying to dive into an investment like that, because you can lose a lot of money. So I would look for deals, but there was very, very few. So finally we were able to get this one. But I think that journey is always going to be looking to grow because it's just something I've been doing. I enjoy it. I love it. And eventually I want to get into building. So I eventually want to build properties, and that's kind of the goal that too. So I think I'll always be looking to grow that portfolio.
It's amazing, and the most important aspect of it as well is that you're enjoying that. So I think that's super crucial. Otherwise, probably it would be more of a feeling like a drag, but it's actually something that you really enjoy. Did you have to along the way up your knowledge and skills in certain domains, or was your educational background actually aligned with some of the things that you're doing right now as part of that, like investing, real estate, and all of that?
Yeah, it wasn't at all. It's given me characteristics and habits that have significantly helped. Like my education was in electrical engineering. So electrical is the field that I'm like strong in, but I don't do electrical anymore unless it's for myself because I'm not a licensed electrician. So I've always had to learn new things. But CN taught me that because I think it was 10 months I was done my apprenticeship, and they said, here you go, you're responsible for 60 miles of signal system and you need to maintain it and take care of it. And I'm like, I've been doing this for 10 months and I've never done this. And they threw you in and they're like, sink or swim, make sure everything works. And that taught me to just, take on whatever you can and learn it as you go. And it's worked for me. And that might not work for a lot of people, but it's given me the confidence to just go in and do stuff, and I will come out ahead. I'll figure out a way. It's given me the tools to figure out a way and to figure out how. And it's been very beneficial. But yeah, I've always, like, if I can give anybody advice, is always be learning. Don't ever stop. Don't ever think your journey is done, because it isn't. And when you think you know a lot and you know everything, you don't. Keep looking, because every day I learn something new. Even on Blossom, like, you find these new tools, you read a new book, there's always something that will help you along the way. But to transition into this, like, I was done a lot of renovations, a lot of construction. I've done my own projects, duplex conversions. And that's where I started, is doing adding additional in-law suites for other people because that's what I wanted to learn how to do. It's been a journey, but it's been a beneficial one, a rewarding one, and I love what I'm doing.
I can only imagine. It's so smart because by having done that for others, obviously you got exposure to it, you know how to go about it, and now later you're going to apply some of those learned skills for your own set of investments and projects. Super fun and fascinating. Hey, I have some set of rapid fire questions that I want to ask you if that's okay.
Absolutely.
Supposed to be more fun and quicker, so you can provide like much quicker responses. Okay.
Sounds good.
All right. So the first one, hopefully some of them, of course, you recall, but if not, that's okay. What is one money mistake you'll never make again?
I've made a lot of money mistakes. Most of them were investment related. But I think like it's hard to say, will I ever make it again? Try to give you a short answer, but basically buying my principal residence was a big one for me. But I mean, yeah, I won't make it again, but I did do it again. But it's because change of goals. But like I bought my first house and I lived in it pretty much by myself and I was paying a lot of money and I was working out of town. And I was like, this is a horrible mistake. So I think that one, like, be careful when buying a principal residence because it's not an investment. Takes money out of your pocket.
One book or podcast that changed your financial mindset?
This one is, I feel like it's everybody's answer, is Rich Dad, Poor Dad. That one just completely changed the way I look at money and how assets put money in your pocket, liabilities take them out. But if I had to give like a book that your audience would like to read, like I liked One Up on Wall Street by Peter Lynch. That was a great one. Invest in what you know.
Yeah, great book. What is one thing you refuse to spend money on?
I think skip the dishes. Like that came out and it's a good idea, but I'm like, I don't know. It just makes me feel lazy, but I don't live in a city, right? It might change if I lived in a city, but I'm like, it's easier for me to get to places. So but I don't spend money on skip the dishes.
And what is one thing you'll happily splurge on without any feeling of guilt?
Vacations, like traveling. I remember I refused to travel and then my wife forced me to, and I was like, oh my God, like this is like experiencing a whole new world. It's different when you're there compared to reading about it and looking at it. Traveling, hands down. I'll spend all my money traveling. It's the best.
Awesome. What motivates you more? Is it fear of losing or the desire to win?
No, desire to win. I mean, I can lose everything. I've been broke before. I could do it again. Like the one thing they can't take from you is the knowledge. They can take all your money. They can't take the knowledge away. So don't be afraid to go broke. Just desire to win.
What is one habit that's made the biggest difference in your success?
I think it's consistency. Anything that you do, make sure you actively force yourself to do it consistently because it's easy to get motivated, do it for 3-4 months, and then you just kind of lose the excitement. Make sure you try to create a habit where you can do it, daily, weekly, but you always set that time away to do it. And even if you're not getting anything from it, just do it anyway, like practice, read, look up a company, read some financial statements or, look at properties in the area. Just whatever you're doing, be consistent because after 10 years, you're going to be like, holy, things compound really quickly. And 10 years is not very long, So just be consistent.
What is the one app that you open first thing in the morning?
Lately, it's been Blossom. I'm not too much of an app guy. I used to watch videos on Instagram and Facebook, but I'm like, they're just too addicting. So I got rid of all that stuff. But now I open Blossom, read the comments and interact with people. Kind of makes me feel like, got all your friends in your phone.
That's right. And what do you celebrate? How do you celebrate actually when you have a big real estate deal?
This one is tough because I don't celebrate. I don't know why. I'm not really a celebratory guy. So I just it's just another day at the office. So I guess like my reward is like spending more time with my family, but I'm not really a celebratory guy.
I want to ask you one final one. Perhaps it could be an advice to yourself, younger self, or maybe somebody who might be at an age of 20. I believe you're right now in your 30s, if I'm correct, Carl. But if you went to go think back about your early 20s, what piece of advice would you have for somebody of that age?
Yeah, stop looking at the price. Like, I know a lot of people, they look and they're like, oh, I don't know, it could go down by $5, it could go down by $10. Or you look at real estate and you're like, that house is 400,000. That's a lot of money. Stop looking at it. Because 10 years, 20 years from now, and I tell a lot of people that are worried about, losing money in the stock market. I said, like, are you going to hold this for 10 years? Because if I could go back to when I was 20 and look at any price of any house in my area, or look at any stock, I don't care what stock you throw at me that's like, still here today and is a blue chip stock, I will buy it. I will take all my money and put it in there. I will take everything I own and I will buy every ounce that I can of that stock. The price doesn't matter. Like, some people argue that, but like everything I've owned, if you're going to own it for 10 years, the price doesn't matter. So I used to look at the price and I spent too much time worrying about it. And now I look back and I'm like, what? Like, I should have just bought everything I possibly could, right? So don't look at the price. Just buy and be consistent. If you're worried, dollar cost average, yeah, there's tools.
Yeah, over time, definitely. Once you give it enough time, you're gonna definitely look back and say, well, you know what? Yeah, actually, it is still good. The saying that yesterday was probably the best time to get into investing, and kind of over time, then you're gonna realize that more and more. But the final question that I have for you, Carl, who's an investor that you really look up to? It could be a famous person, it could be maybe an author, it could be anybody, but in this case, more so from a financial aspect, or an entrepreneur that you look up to, and why?
There's definitely two that come to mind. The one is kind of obvious. It's Warren Buffett, and of course he's the most successful investor of all time, but that's not the reason. He's helped a lot of people. He's done a ton of, I think he's donated like $40+ billion to charities. And you look at that man and he's like, he drives a regular car, he lives in a regular house. He's not, I don't get the impression that he's all about Warren, where other massive investors, you're like, okay, like, I feel like you're just, trying to suck as much money out of the world as you possibly can. So that's kind of why I appreciate him, but also the founders for Costco. I find I try to model my business kind of like them. You go into Costco and it's very like majority of the people are happy, and you know why? Because they buy anything there, they can return it. And people don't, because they sell quality. And that kind of customer appreciation, I think, is necessary. And you don't have businesses like that. Every business feels like it's trying to extract the money out of your pocket. And then once they got it, they don't care about you. But Costco, I feel like, is the opposite. They still have the $1.50 hot dog, the $7 chicken. Like, it's the best. I'm sure like people working there, like the chair boards are like, hey, get rid of this. This is ridiculous. But the co-founder is like, no, we're keeping this. This is what we want. So I kind of envy his process. So those two, I think, are kind of, I even forget his name because I just kind of follow Costco, but I know he's kind of the driving factor. So I'm like, those two I find have helped with success anyway.
It's awesome. Thank you so much, Carl, for sharing your wisdom with us this morning. I really appreciate that. Taking the time on a Sunday morning to spend time with me, and also, really generously sharing a lot of the details that, I'm sure our audience would find valuable. I really appreciated that.
Appreciate you having me. It's been great. It's not too often I get to tell my story to everybody. So hope everyone enjoys it and keep investing.